assets, liability, income, and expense, then is it going to be statement of financial position or statement of profit or loss? Note, for statement of financial position, we talked about the assets, the liability, and the capital of the business. That is for the statement of profit or statement of financial position. And for the statement of profit or loss, we're talking about the income and expenses of the business. For our statement of profit and loss, for statement of profit and loss, we have our gross profit and the net profit. Here, we're going to have our capital. The profits here will be added to the capital we have here to get our statement of financial position. So now we start with the first one. Bank overdraft. What is a bank overdraft? That means you have been able to withdraw more than your available credit balance in the bank. So it is a liability, isn't it? Isn't it, please?
Yes.
So bank overdraft is what? Liability. So bank overdraft is liability. Then, is it going to be statement of financial position or statement of profit or loss? Liability.
Statement of financial position.
Thank you. Statement of financial position. That's done. The rent paid. Rent paid quarterly in advance. Advance payment. That is prepayment. That is prepay. So when you make a prepayment, when you make a prepayment, that means you have paid your rent in advance. So, is it an asset for you or a liability? And is it an expenses or income? Prepayment on rent. Rent we paid quarterly in advance.
It's an expenses.
It's an expenses for the business. But where do you record it?
Statement of profit or loss.
No, statement of financial position. Because it's prepayment. So it's going to be statement of financial position. The third one, motor vehicle. Motor vehicle is an asset and it will be recorded in the statement of financial position. The fourth one, factory premises. We're talking about the premises of the business. So the premises of the business is also an asset and it will be recorded in what? Statement of financial position.
This isn't a statement of profit or loss.
No. Factory, motor vehicle, premises, the building, the surroundings of the business, it's an asset. Then we have sale of goods. You sold goods. It's what? An income for the business and the statement of profit or loss. Good. Then we have purchase of stationery. You purchase stationery, which is what? An expenses for the business and statement of profit or loss. Bank interest received. Maybe you have saved money to the bank, so you received interest. This is an income for the business. You add it to your gross profit. Are you with me?
Yes.
An income for the business and it will be added to the gross profit. So it is income for the business, bank interest received, income for the business, and statement of profit or loss after the gross profit. The next one, insurance premium. You pay insurance. That's an expenses for the business. So insurance premium is what? Expenses for the business, statement of profit or loss. Then we have amount owed to stationery supplier. Here we have a creditor. Yes or no? So a creditor is what? Liability to the business and statement of financial position. The next one, inventory held for resale. We have your inventory. These are stock. It's a current asset. Remember we said current assets are those things that will be turned to cash quickly, that can be turned to cash quickly or as soon as possible. So that is the essence of keeping stock. We are keeping them to sell them to get what? Liquidity. So, inventory held for resale is an asset, a current asset, statement of financial position. It is when it is sold, it goes to your statement of profit or loss. The next one, loan interest paid. You paid interest on loan. Is it an expenses or income?
It's an expenses.
Expenses, thank you. Expenses and statement of profit or loss. Is it clear, please?
No.
Is it clear or not? Interest. Here, remember I said bank interest received. When you receive interest from the bank, it means you have sent money to the bank. That is an income for the business. But afterwards, you're talking about loan. When you make a loan, when you get a loan from the bank, you're going to pay the capital, you're going to pay the principal, and at the same time, you're going to pay interest on that loan. Yes or no?
Yes.
So here, because you're going to pay interest on loan, interest here is an income, interest there is what? Expenses. Do you get it now or not? Are you here or not? Do you get how interest is an expense now? The interest you receive is an income for you. The interest you pay is an expenses. So both of them goes to what? Statement of profit or loss. Income received will be added to your gross profit. Income paid, interest received will be added to your gross profit. Interest received will be added to your gross profit under the statement of profit or loss. Interest paid will be deducted as an expenses. Is it clear? You add it to your expenses, but you take it away from your gross profit. Is it clear?
Yes.
The next one, computer equipment. That's an asset for the business. It's an asset, computer equipment. It's not a purchase. It is something that you bought to the business to use in the business. It's not something that you bought to sell. So it is an asset for the business, not stock. Do you understand? So computer equipment is what? An asset for the business and to be recorded in the statement of. We have activity 10. Case study for Juliet. Said Juliet owns a business delivering lunches at people's places of work. She borrowed £30,000 for her business on 1st of January. That means she takes a loan. So the first thing is a loan for £30,000 for her business. The loan is payable in 4 years' time. So that means it's a long-term loan. So we consider this as non-current liabilities, because it's a long term. Non-current liabilities are liabilities that we have to pay after a year. Come keep in the basket. Long-term loans are loans that it's payable after a year. So this is a loan payable after a year for £30,000. Then said the loan is payable in full years, okay? At the rate of 10%, is payable annually. So there's interest. So interest of 8%. Please, two things you have to note here. First, the loan, which is £30,000. Stop writing this. This is the loan, which is £30,000. It's part of our non-current liability. That's the first thing. Then the second thing is the interest that has to be paid for 8%. So the interest of 8% yearly, they said, which is payable in full years. But interest at the rate of 8% is payable annually. So yearly, the business Juliet is going to pay 8% of this amount yearly. So this is going to be what? Expenses. Expenses goes to your statement of, please stop writing this. Expenses goes to your statement of profit or loss. The non-current liability goes to your statement of financial position. So every year, Juliet will be paying 8% of, let's say 8% of 30,000. 0,000. That's 0,0 times 324. £2,400 interest payable in your statement of profit or loss. I think it's clear, which is what an expenses. Any question about this too? Any questions?
No.
Okay. 30,000 is a non-current liability, which is a loan. It's going to be on your statement of profit, statement of financial position. Then the loan, the interest, which is 8%, will be in our statement of profit or loss as interest payable. That is done. Then she also financed the purchase of a delivery vehicle by a loan of £8,000, which is repayable in full over 4 years as from 1st of January 2020. Interest payable of 7%. So there is motor vehicle here. Motor vehicle. For motor vehicle, it is an asset for the business, yes or no? So it's what? A non-current asset. I think this is clear. With another loan. So that's about that. With 7% which it has to pay on interest. Then the last thing they said, the third paragraph, they said the business has purchased goods for resale, totaling £2,100. Stocks. This amount is to be paid on 15 January 2020. The business started 1st January 2019. Please, are you here with me? The business started 1st January 2019, and this one will be paid 15 January 2020. So So it's still within a year, yes or no?
Yes.
But it was purchased on credit. That means Juliet becomes a debtor, yes or no?
Yes. It's a non-current asset.
A current asset.
How? It's 1 year to be paid.
Yeah, current assets are paid within a year.
Okay.
Do you understand?
Yes.
So this is within a year for £2,100. Is it clear?
Yes.
Okay. So what does the question say? It said, show the total amount of current liabilities at 31 December 2019. Show your workings. Assume that no payments have been made during 2019 for interest. So no interest has been made. No interest was paid. No interest payable for now. But even if interest is paid, we record it in our statement of profit or loss. But here we need to talk about the current liability. So the only current liability we have here is 2,100. Do we get it?
Yes.
The 2,100 is our debtor. So Juliet has to pay 2,100, which is payable within that year. Do we get it?
Yes.
So this is the loan is a non-current asset, non-current liability. This loan is a non-current liability, but here Juliet purchased goods, which is what a current liability because it has to be paid within a year. Any question about it now?
No.
Do we understand what the question is saying now?
Yes.
This a non-current liability, this a non-current liability, this a current liability because it has to be paid within a year. Clear, right?